And we are on our way. We are live at the Schwab Impact Conference here on Schwab Network. It's a pleasure to be here. We've had so many great guests, and taking a look at the big picture, happy to have two esteemed guests with me here today. Kathy Jones, Chief Fixed Income Strategist, Schwab Center for Financial Research, and Mike Townsend, Managing Director, Legislative and Regulatory Affairs, Charles Schwab. Thank you both for being with us here today. We've had so many conversations in the past. This week, what are people asking you, Kathy, when they are taking a look at the current environment?
Well, I think they're really questioning where the direction of interest rates. So we've had yield bouncing around. We've had questions about, is the Fed going to cut some more? Is the Fed not going to cut some more? Our takeaway is no more rate cuts this year because the Fed's made it pretty clear, the hawks have made it pretty clear that they're concerned about inflation and they want to wait and get some data, which we have none of right now, before making another rate cut. So I think we wait until next year on that. And in terms of bond yields, the 10 years just bouncing around in this range. I think that continues to be the case until we have some evidence that inflation's actually going to come down. And right now, it's just not there.
Bouncing around for real. I mean, for example, this past week, I saw it go below 4. I think it was at 398. I saw it up to 414. Now, those may not be the lows and the highs, but I saw them both with my own eyes. We've seen this, and to your point, in the last Federal Open Market Committee meeting, we had Stephen Myron, who votes for the 50 basis points. He knew that was coming, but Schmidt's keeping it flat really brought a lot of attention to maybe what some of the committee members are saying, which is what you're looking at. And Goolsbee today put out a statement too, a cautionary tone on cutting again during the government shutdown. Mike, what are some of your thoughts this morning?
Well, we're in day, 37, I think, of the day of the government shutdown. So, we're watching to see whether we get to any kind of resolution. We've been stuck in sort of an endless loop on the shutdown now for more than a month. So, I do think the pressures are mounting. We not only have federal workers are going to miss another paycheck at the end of this week. We have the food stamp benefits, the SNAP benefits that are all in limbo right now. But to me, the biggest pressure point is airline travel. And we saw the announcement from the Transportation Secretary that they're going to start reducing flights by 10% starting tomorrow at 40 airports. I will tell you that the air travel problems are going to be the thing that actually pushed the shutdown to end.
Because
so we'll see.
The last one was a partial shutdown, and so now this really kicks things into gear. And maybe, do you have a prediction when the government how quickly this government shutdown can end?
Yeah, so really interesting. Watch today, because today the Senate is supposed to be on recess next week. Long planned, they were not going to be in session next week. There's a bunch of meetings going on today in Washington, and if they end up canceling that recess, meaning that the Senate is going to stay in session, I think that's a clear sign that a deal is imminent. And I would not be surprised if that happens, because I think, look, these members of Congress, they fly everywhere themselves, so they're going to be impacted by this. But the constituents' frustration with the air travel problems, I think, is going to really grow. So I'm looking in the next 48 hours to see whether there's significant movement.
And I'm going to ask you about Nancy Pelosi's retirement announcement today, too. I just wanted to get a thought on that. But Kathy, when we look at fixed income investing and some advice to folks, you're looking at credit quality, duration. What are you advising folks at this time?
Yeah, we have pretty much stuck with an up-in credit quality, intermediate term duration message. And the reason is, up-in credit quality is you don't get a lot of extra yield for taking credit risk right now. And there are signs of parts of the economy slowing down, which means we'll probably see those credit spreads widen at least a little bit. So we would prefer the investment grade area rather than high yield or the leverage loan market. Even though they haven't moved that much, we're concerned that there's just too much risk versus reward there. And on duration, we like intermediate term, which is like 5 to 10 year average duration. It avoids the reinvestment risk of staying too short if rates come down. It avoids some of the volatility at the long end. for all the government issues that are going on, rising deficits, the uncertainty about inflation, et cetera. So we're kind of trying to be middle of the road.
And, the economy is such a big story here, how consumers will behave, what will they do with housing? And those rates come into everything from housing to car loans to student loans to everything that we do, how these banks behave. I wanted to get your thoughts, too, on the economy and also this big news on Nancy Pelosi. I don't know, is it big news when she says she's going to retire and not run again? Maybe it's not big news.
I don't know that it's a big news. I think it was sort of surprising that she stayed on for a couple of terms after she stepped down from being Speaker of the House.
So why does it matter? Sorry to interrupt you, but I should spin it forward to why it matters to investors.
Well, just on the Nancy Pelosi thing, I think the interesting change here is the generational change that sort of represents. We saw it in the election on Tuesday night where younger members on the Democratic Party won big elections, New Jersey, Virginia, New York City. But I just think there's a generational change going on for the Democrats. But for me, the biggest thing to watch in the post-election and all of that is for investors is the government shutdown it's going to end at some point, whether it's next week or the week after. I think it's going to end by Thanksgiving. We'll start to get data again for the economy, which I think is going to be really important, not only for the Fed but for investors who want to know what's going on in the economy. So I think that'll start to normalize again in the coming weeks, and we'll see how it all plays out.
And just a final thought on the economy. I mean, what's the big picture here? We're getting soft data. We got ADP, we got Challenger. We've been getting pieces of inflation. We got the ISM services. A thought on the economy, either one of you?
I think it's two-tiered. You have wealthy people who account for, 10% of the population accounts for over half of consumption. So well-to-do people have gains in the stock market, and their jobs are good, and they're doing fine, and they're kind of holding up the economy. When you go to the lower part of the income spectrum, you're seeing more stress. So you're seeing the delinquencies on car loans, on credit cards, et cetera. So two-tier right now, it averages out to a pretty solid growth rate, but we really need to keep an eye on probably the bottom rung to see how that's deteriorating if that continues.
And other big picture thoughts that you want to add?
Yeah, obviously the tariff case is going to be really, really, really interesting to see how it plays out. So we saw yesterday the Supreme Court considering whether a bulk of the president's tariff policy is constitutional. Certainly seemed like there was a lot of skepticism on the court. If the tariffs get thrown out, the president does have other mechanisms to impose tariffs, but those are slower moving, and the potential of refunds, something in the $100 billion range of refunds, that'll be big news for companies. The question is timing. When will the Supreme Court make that decision? We're hearing as early December, but the court has no timeline for anything, right? So, after the holidays, the Thanksgiving holiday, I think you might see a decision there, and obviously that'll be huge for companies and for the economy.
And when we were talking, I breathed a sigh of relief when we started to say when we will get our data, because tomorrow, for example, we would be getting non-farm payrolls, something very important, arguably one of the most important pieces of economic data that we really comb through. It's great to see you both. Kathy Jones, Mike Townsend, thank you for being with us here on Schwab Network at the Schwab Impact Conference. Great to have you. Really appreciate it.